The NSE initially in a recovery phase, seeing somewhat of a pullback in yesterday's session. What are you making of the kind of movement we're seeing at the markets right now?
Well, thank you very much. Excellent overview of our market at the moment. Well, what's most good is the fact that the NSE now is struggling to support itself at the 4,000 mark. We were very hopeful that we'll be going towards 5,000 as the year began, but right now you're seeing a lot of optimistic performance of the market as well as cautious positioning of investors. A lot of foreigners have been coming on board, taking up some of the industrial stocks like East African breweries, and as you noted there, we saw Safaricom. Demand was very strong last week. I guess investors are beginning to take a position because Safaricom has recently closed their books, and we should be anticipating the end of year results, including Kenyan Airways, which is also planning something like a rights issue in the near future.
Well, I've just seen some news headlines pop into my mailbox this morning saying that Safaricom and Airtel have renewed their war, and this is really a headline that doesn't seem to come as any surprise anymore.
Yes, thank you very much. We're looking at Safaricom, especially noting their dominance in the market. The fact that April 1st brought in the aspect of number portability is creating another front where we are seeing a lot of competition on these major players. And looking at it in terms of Safaricom, Airtel, the interest right now has been to make sure that they keep the loyalty of their customers. And that is one of the areas that we are seeing a lot of activity on. And we are anticipating this kind of behavior in terms of the market players. And hopefully maybe going forward is going to be positive competition, hopefully for the shareholders as well as the customers in terms of value as well as benefit from some of these services that are going to be coming through.
Sitting at that 4 shilling mark roughly, are you a buyer in Safaricom right now, Samuel?
Well, to be honest, looking at Safaricom, the anticipation, especially due to the new change of management and strategy, is very strong. And I would be a cautious buyer of Safaricom right now, hoping that they are going to be able to still take advantage of some of the new products that they've been able to come up with, and also to be able to sustain their profitability. Though I would be more of a long-term person as opposed to short-term, because looking at it in terms of, just as you noted there, the kind of wars that you're going to be anticipating in the near future is going to create a bit of a cautious approach for most investors.
Let's touch in on Kenya Airways there. As I said earlier, trading unchanged yesterday at 32 shillings 75, and it's really come into the spotlight, and this time on account of the fact that its fuel hedge contract that was set to protect its margins signed last year, allowing the company to now buy oil at a lower price. What's your view on KQ right now, and the strategy that it's employed that will this time round be good for the company?
Excellent. Well, looking at it in terms of especially the fuel factor, because that's one of the things that always affects their performance, it's a very good move that they're able to take advantage of, and hopefully to be able to bring in something, especially in terms of their bottom line, because looking at them in terms of the fact that the last year's performance was relatively good, but not as much as what people would have expected. Hopefully, they're going to be able to get some revenues from tourism, which has tended to rise significantly, and also looking at it in terms of the fuel factor, definitely that will be something that will boost them. Only that going forward, we are still a bit concerned about what you're seeing in the forex market, as well as hoping we'll get a bit of stability in the Asian market, so that, in the Middle East, so that we can be able to get more stable fuel prices. But going forward, I guess it's still a bit of a volatile factor. And looking at it, especially in terms of how the share price has behaved, it's also reflecting that significantly.
It should translate into improved operating margins. To what extent do you see the carrier passing on some of that benefit to consumers in a bid to improve passenger numbers and so sales volumes?
Well, looking at it in terms of how they're going to be able to at least boost their product offering, as well as to position themselves to be able to give good service. Well, Kenya Airways has been very strong in terms of ensuring that they're able to keep their costs low enough, or even be able to boost their revenues through ensuring that they work on the volumes, as you noted there. But hopefully, going forward, there is a lot of competition that we are seeing from other airlines, which is also creating a bit of a push for them to be able to lower their prices, and hopefully they'll be able to work towards that. Though looking at it also in terms of bottom line, it's still another challenge that they're trying to face to make sure that they still sustain their profitability. So looking at it is a fairly tricky balance for them, and hopefully as the year has already closed, we are hopeful that they're going to be able to still sustain good profits, as well as ensure that they do not chase away their customers through increasing any of their fares.
In the meantime, Samuel, we have those high oil and commodity prices, steel amongst them, pushing up building costs as manufacturers raise their prices to cover those rising input costs. Cement costs list amongst them. So how's that impacting sales when it comes to the major cement producers in the country?
Good observation. Looking at it in terms of the inflation factor, just as you noted, and prices of products going up, we are seeing energy costs, fuel costs really pushing most of these costs. And we are hearing most of the industrialists, especially on the industrial fronts, being a bit concerned about how they're going to still sustain. Crown Badger is one of the ones which has already said is going to consider raising their prices. Other River Mining, the share price has not been very strong, especially in the recent past, also reflecting the fact that we might not be able to sustain, they might not be able to sustain their profitability going forward. And though right now, I guess the other concern is that there are a lot of cheap imports that are pushing the challenge for most of these industrialists to be able to try to see whether they can absorb some of these costs instead of pushing them to the clients so that they can still remain profitable within the industry. And so that still puts them in a very delicate balance, and it's a bit of a concern at the moment. And hopefully we're going to see the government either coming in to be able to see whether it can be able to cushion them in some way, or them being able to try and boost in terms of their volumes, more selling, especially taking advantage of Southern Sudan, which is coming out.
You talk about government stepping in. What about government stepping out? Because we've got East African Portland Cement Company. It's the second largest cement maker, where government holds a 25% stake in that company. And we know the market had been anticipating this to be privatized moving forward. What kind of progress are we seeing on that front?
Well, looking at it in terms of the government now being a player in the market is another factor that you've just noted there, which is a very, very good observation. Looking at it in terms of the cement industry, the government has been very, very strong player in that area, and hopefully there has been talk that it will be stepping out and selling some of its stakeholding. I guess the only challenge right now will be how it will be able to exit and not be able to affect the price, especially in terms of the performance, because the stakeholding, just as you noted there, is fairly high. And the challenge right now will be to be able to get a significant person to be able to take up some of those shareholding, because if at all the government decides to offload into the market, especially at a moment like now, it might depress the share price. And I'm sure the government is very careful not to affect the market on a negative perspective. So I guess right now it's more of a hunt for somebody or a significant stakeholder, either an institution who can be able to take up most of that shareholding. And as soon as I guess that is taken up, it will be able to bring in more competition into the market through privatization.